Oil prices are surging, and so too is gold, while share markets are expected to be in a negative risk off tone. And you might also expect volatility or market fear to also creep up as well. Today is Monday. It's great to have your company on this 23rd day of June. Good to see you as always. So, investors are going to be on tenterhooks this week, weighing up a trifecta of elements. On one hand, of course, we had Trump saying that he obliterated Iran's nuclear power sites. And now we have Iran potentially retaliating against the US. And secondly, all this comes at a time when this week we're just 6 days away before the end of quarter globally. And in Australia, it's the end of financial year, just 6 days away. And thirdly, we do have several Fed speakers, such as the Fed's Christopher Waller, saying interest rates in the US could drop as early as July. Now, all this simply means, combining everything together, is you would expect volatility and rotations in investment portfolios to be multiplied and fierce. That simply means investment managers will be taking profits, remember, and selling shares that have done really well and gone up over the past quarter and financial year in Australia. And instead, they'll be taking those profits and going into underperforming stocks. Yes, especially they'll be buying into safe havens and as well. Now, you are basically left with a lot of buying opportunities, and fortune favors the brave. This is something that you might need to consider as well. But in early trade, just in the last couple of hours of trade, we've seen oil prices jump significantly, and this is something that should be on your radar for several reasons. So the oil price is up 2.5%. It's just shy of $76 US a barrel. Now, calls are now suggesting that oil could get to $100 a barrel should Iran retaliate. When I say calls, this is options for the options for oil to get to $100. So investors have been buying options for oil to get to $100. Secondly, we're also seeing a lot of analytics out there, a lot of analysts, including Bloomberg Intelligence, suggesting that oil could also get to $100 US a barrel. We also know that the US has tapped China to prevent Iran from closing the Strait of Hormuz and disrupting oil. But you do need to consider why the US has actually asked China to get potentially involved. It's simply because China, they could get involved because they get most of their oil from Iran. You also need to consider that regardless of immediate retaliation, markets are probably going to price in worst case scenarios. We call this a higher risk premium or a war premium. So expect higher energy prices, expect higher levels for the safe haven gold, precious metal. Also, what does this mean for you? We'll expect obviously higher petrol prices. Secondly, expect energy bills to continue to rise. Also, let's think about oil stocks this week. On the screen for those tuning in on the podcast is Woodside Petroleum. This should be on your radar this week. Australia's largest oil and gas company, Woodside. They made gains last week, looking to extend those. Santos also will be another huge focus, as well as utility stocks, APA, Origin Energy, and in New Zealand, we've got Meridian. So keep your eyes on those. The other thing for you to consider is that you should be expecting higher prices for the precious safe haven metal. Obviously, expecting more flows or more buying in gold as well, and probably expecting gold to head back to its record high of 3,500 US an ounce. Now, remember, some of last week's worst performers were actually gold stocks, and that's because the gold price paired back, basically rubbing out the scenario that we could see tensions pick up in the Middle East. And then now we're back to the worst case scenario this morning. So that's probably why you should be expecting higher levels for stocks such as Evolution Mining. So Evolution Mining was one of the worst performers last week. They lost about 15% on the ASX. Ramelius Resources, Northern Star are also some of last week's worst performers, expecting them to gain higher ground again and recoup some of those losses from last week. As for what else you need to watch, well, there's plenty that could rock the boat further this week. Of course, we've got the Fed's preferred inflationary gauge. We call that PCE. What happens if that's hotter or higher than expected, well, obviously that's not going to be very good, because a hot inflation read means the Federal Reserve probably won't be cutting interest rates, and then you'd be expecting shares to step lower. In Australia, we've got Australia's May inflation report. That is expected to show that inflation is up at 2.4% year on year. Of course, the concern is if that's above expectations, and that could also rock the boat in Australia as well, and pressure risky or riskier assets such as technology stocks and real estate to fall lower. On the stock front, what you should be watching is Virgin Australia. They're expected to start trading on the ASX tomorrow. It's not a good time because the oil price is up 24% in a month. And also later in the week, we've got a lot of companies, about 20 ASX companies, declaring ex dividend. So this is basically where they're transferring the dividend right to shareholders, and that usually causes stocks to fall lower because people usually sell after they gain their dividend right, and that pushes shares lower. But it also means that you can also buy into some of the companies that are going ex-dividend, because if you buy before the ex-dividend date, that's right, it means you'll be entitled to that upcoming dividend. So companies to watch that are going ex-dividend on Friday later this week, there is 19 companies, including Goodman Group, one of the world's biggest logistics real estate groups. We've also got Transurban going ex-dividend, as well as a lot of property groups as well. Goodman Group is up on the screen. Keep your eye on that stock because it's trading markedly higher, and it does pay somewhat of an attractive dividend to some. All in all, strap in. It's probably going to be a rocky week. Moves are expected to be fast and wild. Take care, stay safe, happy trading. We'll see you tomorrow.